Well, hello, everyone. Happy Cinco de Mayo. Welcome to Notefellow. I'm so glad you're able to join me tonight. It's a great day here in Texas where I'm located. We've been having really good weather. It's been pretty nice. So, thank you so much for taking time out of your day. I will make my presentation to the point and not waste a lot of your time. After all, it is Cinco de Mayo, right? So, my name again is Wayne Garrett. I have this note investing company called Notefellow, and I've been in real estate and note investing for the last few years. And I really enjoyed investing. I've invested in storage facilities and apartment complexes, and done different private investing in single family homes and different people's projects. And the thing I like about note investing is it's a niche. If you were at a fishing pond and you were standing around it, this is kind of my idea about if you're when it comes to rental properties and fix and flips, everybody's at those ponds. So if you go to a pond and there's 100 people standing around that pond, all with their lines in the water fishing, it's a lot more competition for the fish that are in there. And I like to find investments and opportunities that are a little more of a niche that not everybody does. I think that gives you more opportunities to do some really cool things. And I see note investing as being one of those opportunities. So it's something that you can add. If you're somebody that does fix and flips or rentals, you can add note investing to it. But if you're somebody that has an IRA, like a self directed IRA, some other type of retirement fund, and you're looking for passive income, note investing is fantastic for passive income as well. And I'm going to show you some examples of that as we go through my presentation. So let's get right into the presentation. Again, thank you so much for being here tonight. So let's get this going. I'm going to get my name off. So this is going to be an introduction to note investing, kind of going through some of the basics. So before we get started, I'm going to say that there's no such thing, according to the SEC, as a safe investment. And there's really not. There's nothing that you can absolutely guarantee that there's no possible way you'll ever lose a nickel. I'm not going to mislead you and tell you that that's what note investing is. It's not. Let's be realistic, but it's pretty darn good. And always check with your advisors. The following presentation is not tax, legal, financial, or investment advice. Notefellow is not endorsing specifically any products, services, or investments. So, why note investing? Well, the goal is to become the bank. Have you ever noticed that some of the largest buildings in a city are bank buildings? If you've never noticed that, the next time you go to a big city, uh, say Dallas or New York or Chicago, wherever you happen to be from, go downtown and look around. Look up high. You'll see PNC, Chase, Wells Fargo. Those are some of the biggest bank buildings. Well, why do you think that is? They have a lot of finance. They have a lot of money from lending it to people. They are in the business of lending money. So let's look at this chart. Right now, there are $5 trillion in assets in money market funds. And this is the biggest pile of cash ever. And this is dry cash sitting on the sidelines, not earning any interest, not making anyone money. It's just parked. And I think that's just kind of a sign of the times that we live in. I think this slide is pretty relevant, especially now in the market that we are currently in. But over the last 15 or 20 years, has your retirement account felt like this? If you have a retirement account, a 401k with your company, in 2008, the market lost 37% in 1 year. And this resulted in many people exiting retirement and re entering the workforce. Can you imagine being retired and thinking you're set to lose so much value in the stock market that you then have to go back to work? I think that would be pretty depressing. What do we want when we make investments? We want our investments to be steady and consistent, right? You want to know that your money is doing something while you're spending time vacationing, or spending time with family. You want to know your money's out there working for you on a consistent basis. So what's a note? Let's get into the nitty-gritties of a note. A Federal Reserve note, right? A dollar or $100 bill, any of these money, it's a type of note. Well, what about a check? When you write a check, this is also another type of note or a promise to pay. What about when you buy a car? Most of us finance the car that we purchase, and that's done with a promissory note. But today we are focusing on mortgage. These are the ones that we're here to invest in today. So let's look at some of the basic elements that make up a note. So you have the terms of the agreement. You have the principal and interest rate, the monthly payments, an amortization term, and you have a buyer. And that buyer signs his name, guaranteeing that he promises, or not saying guaranteeing, but that is his promise to pay on that note according to the terms. So let's look at how a note works. And this is pretty straightforward, right? So you have the promise to pay, you have the collateral, which is the house, you have the bank, and the home buyer sends the loan payments to the bank, right? That's what we all do. If you own a house, this is the process, month in and month out. The bank owns the note, the home buyer owns the house. So let's look at rental property versus owning the note. I thought this would be a cool little comparison to do since we talked about rental houses a second ago. So this is going to be the same house, and we're going to look at the math two different ways. So the first one we're going to say is, well, what if we bought a note on the house? So the home value of the home is $141,800. The original note was written for $101,900 at an interest rate of 8.5%. The term was 357 months, and the monthly payment was $785. 32 payments have already been made. This is known as seasoning. The note balance purchased was $85,900 for a payment of $785 per month. Now, what if you bought this as a rental house? So we have the same purchase price, $141,800. Well, you're going to have to put 20% down at least, and your loan term is going to be at least 6%, and with interest rates going up, that could be a lot more. So, but we're going to go with this example of 6%. So your loan payment's going to be $117,940 is what you're going to owe. Your PI and TI is going to be $1,018. And your rent, let's say you could rent this for $1,500 a month. Maybe a little more, maybe a little less, depending on your area. So your gross profit is $481.84. Now, we're going to take out 10% a month for repairs, and we're also going to take out 10% a month for property management. So that gives us a profit or a cash flow of $181.84 a month. And you see the difference? If you buy the note for the house, you're looking at cash flow of $785 a month versus buying the whole house and owning the house and trying to make a rental from it. Your cash flow is $181 a month. If you're lucky. I think I'm being conservative, honestly, with some of these numbers. So the advice is you can avoid tenants and toilets with note investing. And you can pay a service provider to collect the payments. And they charge a flat fee, and it's usually around $35 to $50 a month, depending on the service provider. So I know what you're probably thinking, and this is a conversation I've had with people in the past. It always comes up. Well, what if they stop paying the note? There's some ways to handle that. So the home is valued at $141,800. You invested $85,900 for a first lien position on the property. There's a couple options. You could restructure the debt to a willing and able borrower. Because sometimes people have hardships, right? Especially in COVID. There were some people that honestly ran into hard times, but they found jobs, they've gotten back on their feet, and they're able to start making payments, and they really want the house they're in. They're happy where they are, they need a place to live, and they just want to work something out. This is something traditional banks usually will not do, called a loan modification. Typically, your traditional Wells Fargo, Chase, they don't do too many of these. But as a note investor, you have the opportunity to do this for somebody and help somebody out. Now, if they're unwilling to pay and they just have gotten to a spot where they're not even trying, then there's always foreclosure processes that you can go through and get your money back because you've got the collateral. And the collateral is really what's guaranteeing your money when you invest in a note. So we're going to look at one. Let's look at our note of the month. And this note is in Alabama. This is a very nice A-frame house. Let's look at some of the characteristics of this note. So we have the note terms. So the purchase, you're purchasing 116 months on this note. The rate is at 6%, and the P&I is $1,529. It's a pretty good P&I payment. And the note has already been seasoned for 16 months, which is great and this is what we would consider a performing note. The borrower has already been paying for 16 months and they've made all their payments and they've established a good track record. So this is a good performing note. It is third party serviced. And the purchase price on this note is $134,091. This is for sale, by the way. If you want to contact me, and I'll cover this a little bit later in the presentation, contact me, reach out, and we can discuss if you're looking to invest some capital. So let's look at the collateral. The collateral, this house that's backing your investment, is a 2,400 square foot home, 3-bed, 2-bath, 3 covered parking spots, built in 2008, sitting on 3 acres. And it has a market value of $249,900. So you have a nice wide cushion in there, which is what I like about this note, is there's plenty of margin. I very seriously doubt that this would ever go non-performing. Most likely the people that live here are going to either sell this house in the future or it'll just pay off. But if something came up and you had to go through foreclosure, it's a very nice house and it'll sell. A house like that will not be a problem to sell. So let's kind of summarize. We're coming kind of to the conclusion of my presentation. So what benefits do you get? Well, from note investing, you get hands-off passive investing. You get the opportunity to maybe grow your retirement, create financial freedom for yourself, and you can leave a financial legacy. These notes can be willed to your heirs, just like a piece of property. This is an investment. If something happens to you, as long as you have it in a will, the payment stream will go right to your heirs. Maybe you can save up for college. That's a possibility. Or just create overall family wealth. Or if you have more income, it also gives you opportunities to give to your favorite charities. So the action from this is to review your investment goals. Really think about what are you trying to accomplish in your investment goals, because this type of note investing it's a long-term play. You're investing for the long term to gain a nice cash flow, and determine if note investing is a strategy that fits your goals. And then set up a one-on-one appointment with Notefellow to really get into the details. We're not getting into a lot of details during this particular live stream. I want to save that for one-on-one calls so that we can get more into your specific situation. Like my Facebook page. Go to Notefellow and like that. Follow me. I make posts frequently, and I put a lot of good articles out there on note investing and the different benefits and different aspects of it. So if you haven't followed my Facebook page, please do that. Also, follow me on YouTube. I have several videos that I've created on YouTube. A lot of them are notes versus traditional investing vehicles. I have notes versus wholesale, as you can see, notes versus stocks, notes versus multifamily, and the list goes on, notes versus rentals. And these are just short little 5, 6 minute videos that give you a little more detail about what I'm talking here with the investing and the opportunities that this creates. And you can also go to my website. If you go to my website, notefellow.com, there's an orange box and you can see where I've got it circled in green. Schedule a strategy call. That will open up a portal to my calendar and you can actually set up a Zoom. We can do it on the phone or we can do Zoom and we can have a one-on-one conversation and really, like I said, get into the specifics of what your goals are and what you're trying to accomplish, and let me see if I can help you out. If we're a fit and we can find a note or a deal that would work with you, I would love to have that conversation. So again, just ending, I know our time's been brief. That was intentional. I didn't want to take up a lot of your all's time, but I appreciate you tuning in. Or if you're watching this on a restream, thank you for watching the video. And again, please feel free to reach out. I would love to have a conversation with you. Again, happy Cinco de Mayo. I will see you guys later. Bye bye.